I did a video recently where I talked about what's happening with the housing market, and the answer was, I don't actually know the answer to that question. But there are some interesting factors and some interesting things to look at that might tell us what the housing market is about to do. Not too long after that, Dave Ramsey, obviously having seen my video,
Nice, smart,
made a video about the housing market and said something completely opposite, making a prediction based off of basically nothing. So we're going to watch that video and we'll break it down using the information that I proposed in my real estate video. Let's get into it.
A lot of folks are saying, I'm going to sit on the sidelines and wait on buying because house prices are going to go down. Let me help you with this. House prices are caused by one thing and one thing only: supply versus demand. How many houses are for sale versus how many buyers there are. Buyers are fewer in a bad economy, a high interest rate economy. There's fewer buyers, but they have to be less buyers than supply for house prices to go down. That's not going to happen.
So he makes the right point. Prices are set by supply and demand, but when demand equals supply and there's an equilibrium there, meaning that the amount of people who need houses are getting houses, then that keeps the prices even. If the supply gets above the demand, meaning that there's less people who want houses, and that could be caused by higher interest rates, more expensive houses. As the housing prices go up, the demand starts to drop a little bit. And what we saw for, the most of what happened during the pandemic was that the demand was high and it was higher than the supply. The supply was artificially low, and we were seeing that kind of drive the prices up, and the demand starts to come down until we hit this equilibrium. It looks like right now we're pretty close to this equilibrium as interest rates continue to rise and the Fed continues to increase the interest rates, and home prices are kind of leveling off a little bit. So we're hitting that point. So the question is, will there be a point in which the demand goes lower than the supply and the supply starts going back up as supply chain issues are starting to resolve themselves, new houses are being built? Or will there be, or will it is this just a hiccup? Will the supply or the demand pick back up and we'll go back up over the top? That's a question I don't know. But so he's correct with he's correct with his theory, but then I want to see how he applies it.
Here's the real numbers. Here's data, not feelings. Let's talk this through. 5 million more 35-year-olds right now in the millennial generation, prime house buying age, than there were in 2007.
How many of those actually could afford a down payment, can actually afford a house, or even want to? The data's starting to show that people are more interested in this generation in renting than they're actually in buying, because there's less to think about. It's like a subscription to living as opposed to buying a house and then taking care of things like maintenance. In fact, a lot of people, when they buy a house, the one main thing they say that they didn't realize was going to affect them was maintenance. They're to spend time fixing things, find people to fix things, spend money to fix things. It's something they weren't aware was going to be such a big part of home ownership. So more and more of this generation is renting than they are buying, which would indicate that even though there's more of them, there's not actually an increase in demand.
128 million households right now. In 2007, only 116 million households. 12 million more households operating that need a house.
Yeah, but again, renting. So this is I'm a prime example of this. I rent in the Bay Area in California because to get to a place where I could provide a down payment in order to get a house that gives me a monthly rate that makes sense for my budget would take me forever. I'd probably have to put way more than 50% down, and the average house rate here is like 1.5 million. That's crazy, and it's going to take me forever to get there. So I rent here. In the meantime, I've bought in other places, and the income I get from that is pretty much covering my rent here, which creates kind of the same result. I'm getting the equity, I'm getting the income, I'm buying off the principal, I get tax advantages from all that, and then meanwhile, I get a pretty nice place to live here, and it all ends up balancing. So if the prices do get high enough, even for households, we're not going to choose to buy simply because we exist.
house, and yet there's a shortage of housing. In 2007, we had 2.1 million new housing starts. This year, we'll have 1.4 million new housing starts. We have 50% as many houses for sale right now as we had in 2007. Inventory is at half. So the number of buyers would have to go down so dramatically before the house market prices go down. It's not going to happen.
I mean, again, the number of buyers has dropped dramatically just because the interest rates went up. I pointed this out and I proved it in a previous video. About 1% in interest rates increases. So we went from like sub 3% interest rates on mortgages during the pandemic. And now we're getting close to averaging around 6% for somebody's personal home, right? So we're at like almost, maybe I'll call it a 3.5% increase. For every percent increase on a mortgage, that takes down the buying power about 10%, right? So if you have, because most people tend to look at things in terms of monthly payments. If I can pay in my budget $5,000 a month for a place, that's all I can pay for it. It's $5,000 a month. So if interest rates go up, then I can buy less house. Basically is how that works out. Well, if you're selling a bunch of houses and the interest rates go up and the people can buy less house, it's not within their budget, that reduces the demand. So simply saying that there's a whole bunch of people and there's not very many houses doesn't equate into what the actual demand looks like. And the way that we can tell if we're hitting an equilibrium is if prices start to level off. And if you see sales for houses actually go at or under the asking amount, then that means we're hitting an equilibrium. It could be a temporary one. Like every once in a while, you might see a 1 month where it kind of hiccups and everything kind of stays the same, or it drops just a little bit and then it goes back up. But because the interest rates are rising and there's promises of more rising interest rates in the future, you would assume that like if I could afford, X house on a 5% interest rate, I'm not going to wait for a 6% interest rate to come along and then go buy a house because I'm going to lose buying power. So I'm going to try and lock in that rate now. So there should be a run on the banks to get mortgages to buy homes. And I think we saw that during February and March. And then now we're seeing the part where the interest rates are high and people are having a hard time being able to afford those monthly payments. And we're going to start seeing drops. If you take a look at this chart, this is San Jose, so this is around where I live in the Bay Area, and you're going to see a drop of what looks like about $150,000 in sales. In the actual sale price, the median sale price for this area has lost pretty significantly. And I showed this graph before, and it was not this big because, there's been a few more weeks now. And the Fed has promised more interest rates increases. So what do you think is going to happen to this chart? It's probably not going up anytime soon. It's probably going to go down and then find some place where it levels off, where it just this is where now the supply equals demand based off of the new interest rates.
House prices went up 32% in 2020, 18% in 2021, 7% this year
Yes, because there was a lot of demand and not very much supply. So we saw the prices shoot way up. That doesn't mean the prices will stay there because he hasn't proven that demand is still way higher than supply. He just made a statement about a whole bunch of people existing.
2022. Next year, projected to be a 5% increase. Every year for the next 5 years, we're going to have fewer houses for sale than buyers wanting to buy them, driving the price up. House prices are going to go up every year for the next 5 years. If you're ready to buy, you're in good shape financially, you need to buy now. Don't wait on house prices to go down. They're not going down. What goes up must go down. No, it doesn't. I just gave you data, real facts. They're not coming down.
Okay, so that was the end of the video. So let's sum up a little bit. I don't think his real facts are real facts. I think that there's a lot of stuff that happens in the housing market. There's a lot of stuff that could happen in the housing market. We just don't know all the factors involved in what's going on. He's right to say that supply is way low. It's one of the reasons why we saw a tremendous jump in prices over the last couple of years. And that's obviously costing people a lot. there was still a pretty high demand to purchase homes. Interest rates dropped significantly, and that creates demand because, like I said, 1% interest rate is 10% buying power. So if you look in terms of buying power, if buying power is actually above the price of the homes, you're going to see prices increase. And then if buying power starts to drop, and then we drop interest rates again, or increase interest rates again, which they said they're going to increase interest rates at least 7 more times before the end of this year or the beginning of next year. So if we're here and we drop interest, or I'm sorry, if we increase interest rates again, we're going to see buying power drop below the price of houses, which is going to cause the housing prices to start to drop. And we've already seen that where I live. It's going to start happening where other people live. Now, how much is it going to drop? Is it going to be like a 1-year hiccup where it just kind of stagnates for a little bit? Yeah, it could be. Is it going to be a significant drop? I think it's feasible to see a 10% drop and maybe even higher, like a 20% drop in some places. Do I think it's going to continue to go up? Probably not for a little bit. I think that as interest rates keep going up, it's going to be hard for people to buy. That's going to artificially reduce the demand. And I don't see a whole lot of increasing in housing value in the near future. It's just not there in the numbers. Now, I could be wrong because, like I said, I provided a bunch of data, and my conclusion was I just don't know what will happen. Dave Ramsey presented some data that doesn't seem entirely related to the problem, and then just made a statement that housing prices are going to go up year after year. Now, I would love to believe what he has to say because I love real estate investing, but I'm just not quite sure it's true, and I think it's a little bit irresponsible just to say, based off of these factors, without any of the other considerations, housing prices will continue to go up. People are going to believe that and make choices off of that. So, moral of the story is, I don't know what's going to happen. Dave doesn't know what's going to happen. Take as much data as you can and digest it, and hit wealthyidiots.com because we talk about this stuff all the time and you can stay on your information. Thanks for stopping by.